Good morning. Thanks for joining us today. We have Anaconda Mining presenting, and with me I have Rob Dufour, CFO, and Kevin Bullock, CEO. Before we get started with the presentation, I'll just remind everyone that it will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's website and their disclosure in the presentation, which was actually updated for this webinar, so you can find it there. And there will be a Q&A section at the end. You can input the questions in the Q&A box at the bottom, and we'll address those once the presentation's over. So with that out of the way, I'd like to introduce Kevin Bullock, who I've known for a number of years now. We actually worked together previously at Golden Rain. Apparently he has an affinity for oddly named companies. So Kevin, nice to see you again.
Nice to see you. Thanks for having me on.
Yeah, it's great. So you want to give us a little bit of background on Anaconda? I think you've been there for 2 years now, is that correct?
I've been here for a little over a year and a half, and there's been a lot of changes in the company, all for the better. We're a focused company now working on growing to be a size that will invite more interest into the company and create value for shareholders. So I can start by taking you through the presentation that should be on screen, I believe, Deborah?
Yep, you're all set, ready to go.
All right, so Anaconda is focused currently in Eastern Canada. We have a producing mine in Newfoundland, and we have a development project in Nova Scotia, and we have exploration ground, which is quite exciting, and I'll take you through that story now. Deborah has already put forward the forward-looking statements, so I'll skip over that slide. We've been operating in Newfoundland for over 10 years. This is a top-tier mining jurisdiction in Atlantic Canada. And because we've had such a quality team operating the mine in northern Newfoundland, we've got a strong treasury with a rather robust balance sheet. We continue to free cash flow at the mine. There are record prices of gold nowadays, and selling into that with a strong operating team is creating quite a considerable amount of free cash flow for us as a small producer. This helps us move forward with our growth strategy. We've established a platform for growth to be targeting 150,000 ounces a year in 3 to 5 years. We recognize that our current production of under 20,000 ounces is not large enough to attract a bigger investment community and bigger eyes on the story. So we've set that for ourselves to move forward. You can see our project in Point Roost in northern Newfoundland on this map. That's the producing property, and the Goldboro project is the development property in Nova Scotia. You can also see on this map the Tilt Cove project, not very far from Point Roost at all, which is a very exciting exploration property that we'll discuss as well. Point Roost is 100% owned, as I said earlier, 10 years of production, more than 10 years now. We have guided for 18 to 19,000 ounces this year. We had, in the first half of this year, very good cash flow generation, 7.8 million EBITDA at the project level in the first 6 months. It's great infrastructure, long-term tailings storage capacity near a town, so there's no camp required. Quite an ideal spot for us. We have 3 deposits within 5 kilometers of the Pine Cove Mill. All 3 of them are either have been mined or will be mined, and we continue to truck ore from these various deposits to the Pine Cove Mill. About 40 kilometers to the east, easy trucking distance on quality roads, we have the Tilt Cove Gold Project in Newfoundland as well. This is a high-grade area because it encompasses a past producer that produced an average diluted grade of close to 10 grams per ton. And we have the strike extents for about 20 kilometers of prospective ground on either side of that past producing mine called Nugget Pond. So we initiated a program in the winter, a drilling program. It was soon halted due to COVID. However, we're now back with all our protocols in place to re-engage in that program this month. So you'll see drilling start at Tilt Cove, which we're quite excited about for the future of the Point Roost operation. We also have the Goldboro Gold Project in Nova Scotia, which is a development project. It's 100% owned. We paid $15 an ounce for it when we bought it a few years back. It had about 850,000 ounces. We've had several drilling campaigns. We're currently sitting at about 1.4 million ounces. We are also, again, infilling. We've just finished a 5,500 meter infill program to convert inferred resources to indicated so that they can be used within the feasibility study. We're completing a definitive feasibility study this year by the end of the year. And we hope to take that and go out and get project financing to build Goldboro Gold Project. Quite an exciting project. Lots of new opportunities happening with that project as well. So expect to see a lot of results out of Tilt Cove and Goldboro as far as drilling goes over the next several months. We have a very experienced team. For those of you who don't know me, I'm a mining engineer by background. I started out as a miner underground, worked my way up through mining into the business end of mining, and then for the last 20 years have been running companies. I helped a small team take Kirkland Lake from its infancy as a shell company called Fox Point Resources into Kirkland Lake Gold. Negotiated the acquisition of the Macassa mine and moved up to Kirkland Lake and reopened that. I was also involved in taking Gold public in the early 90s, moved to West Africa to run that. And then I started my own company called Volta Resources, which eventually was purchased by B2 Gold Corporation it's got to be 6 years ago now. I'm still on the board of B2 Gold because of that transaction. When I looked at Anaconda and saw the building blocks that they have and the foundation that they put forward, I saw something that had the building blocks to build something quite exciting and quite good. It's been a year of change in getting the right people in place and the right projects and the focus, and we're at that point now. So this is really a transition time for us. We have a very experienced exploration team headed by Paul McNeil with his counterpart, Dave Copeland. A lot of experience in Eastern Canada, have several discoveries under their belt, and they lead our exploration team. We have corporate affairs, Vice President Lynn Hammond, who is used to be in government in Eastern Canada, and also in the Mi'kmaq Affairs, the Native group that's in Nova Scotia. And Amanda Ballet is our Vice President of Human Resources as we move forward and have transitioned into hiring quite a few people to build Goldboro. Amanda comes from Hud Bay. She's doing a very good job. And I'll hand it over now to Robert Dufour, our Chief Financial Officer, to introduce himself and then walk through the next few slides.
Thank you, Kevin. I appreciate everyone's time today. Myself, I'm a chartered accountant by background, but have been in mine operations and mine development throughout my entire career. That's always been my focus and certainly my passion. Started early on with a company called Northgate Minerals, which some may remember, who did Young Davidson, the Kemess mines out in BC and in Northern Ontario. Spent some time with Rico Gold as we spun out their Australian assets at the time. Ended up joining Crocodile Gold as CFO. Had to restructure the balance sheet, among other things that we did there, and were quite successful to the point where we attracted the Lucas Lundin TSXV vehicle, Newmarket Gold, ended up merging those two companies, and I took on the role as CFO for that company, which created a tremendous amount of shareholder value. We then ended up selling that to Kirkland Lake Gold. So kind of interesting, Kevin, was I kind of on the beginning end of Kirkland Lake Gold. I was on one of the more recent iterations of that company, which worked well for many shareholders. And very similar to Kevin, when I joined, it was about just over 2 years ago. The building blocks are here to do something very similar, to build up a company. There were certainly some things that need to get done. We don't need to dwell on the past, but I think if anybody who knows the story over time has seen what those are, I think what you have now is a company that's really ready to take the next steps. And, we speak, Kevin and I speak about that certainly as mining professionals with mining history, but importantly, as shareholders of this company. Each of us have invested significant amounts of hard dollars, not options, not units, but hard dollars into this company. The corporate structure, we are listed on the big board, the TSX. We have 146 million shares outstanding. We also have almost 7 million options, 7.4 million warrants. There's a big part of those warrants came on when we acquired the Goldboro Gold Project in May of 2017. Most of those, actually, if not all, will fall off in the next 12 months, and they are all actually quite a bit in the money at this point. So something we need to manage, but a built-in funding source as we move forward. Market capitalization, when we opened today, was 77 million. We're up significantly already, so that number is higher. Cash position, we have a very strong treasury of $11 million, which includes a $5.5 million private placement we just closed. We brought in a major institutional shareholder, long-term shareholder out of Switzerland, and we're able to do so using a charity trust structure. So, we were able to issue about $12 million shares, but at a 45% premium. Minimal dilution to shareholders, but big potential gains as we're able to really aggressively ramp up our drill programs. Current debt, $2.1 million, total debt, 3.7. Most of that relates to a term loan that we did with Royal Bank of Canada in early 2019. Just mentioned that we were able to do that within a few weeks at a cost of debt of 4.6%. There are not many junior mining companies out there who could get that cost of capital. Shareholder base is largely retail, but we've seen strong institutional interest over the last little while, including the recent private placement. And as mentioned, management and the board are significant owners as well. We have coverage from both Beacon and M Partners with target prices well in excess of where we sit now, despite our run. And we've had some good institutional interest from other groups who have written about us, not full coverage, but starting to put us on their watch list. So as Kevin mentioned, we've been operating for 10 years, albeit small scale, but in a very well-established mining district around Bay Verte, Newfoundland. Not as well known as many other mining districts in Canada, but very prolific mining camp, ongoing mining for well over 100 years. And with critically, lots of infrastructure in the area. We're the only operating gold mine. We have the experienced local local workforce. We don't have a camp. Roads come in and out, so it's a very easy place to do business. We have an operating mill, long-term tailings capacity, so it really gives us the ability to leverage this as we explore in the area. And as I mentioned, it is a prolific mining camp, home to many producing high-grade gold mines in the area. There's been at least 3 gold mines that have produced over 400,000 ounces of gold. It just hasn't had a lot of exploration, but we plan on changing that. Just to give a sense financially, how we're proceeding for 2020, as Kevin mentioned, we were guiding to produce between 18,000 and 19,000 ounces of gold. That's at operating cash costs of $850 to $950 US. So there is a significant margin there, even though it's small production. All-in sustaining costs are only about $100 more. We have contract mining, so minimal sustaining costs on the mining side, and generally 1 to 2 million Canadian on the mining side per year. First half off to a pretty good start, 8,800 ounces of gold sold, average realized gold price of over $2,000 Canadian, and we're selling well beyond that now. And just to show it, for the first half of the year, we generated almost $6 million in operating cash flow. That's after paying for corporate overhead and all the other overhead costs. So all that money is available to go and invest in our growth strategy. A lot of people ask, with Point Roost, and this is a common question, well, life of mine, where are you going next? And as just yesterday, we announced what is the next stage, and that is the Argyle deposit, which will soon be the Argyle mine. 22-month project, 535,000 tons of gold, and will produce almost 31,000 ounces over that period. Very low upfront capex, just under $3 million, low sustaining capital over the life of the project, about 2.7. Very robust economics. We ran the reserve and our plan at Canadian $1,900 gold. And even at that price, you can see NPVs and rates of return, the IRRs, very healthy, critically on an after-tax, not just a pre-tax basis. If you were to plug in today's share price on an after-tax basis, you have an internal rate of return well in excess of 1,300%. This is tremendous leverage to gold in a rising gold price. $2,300 per ounce. This generates almost $20 million after-tax NPV at $2,600 per ounce, 1,273 NPV, and tremendous downside protection risk as well. I don't think any of us think the gold price is going to drop off, but nonetheless, that just shows what a robust project this is. And that builds in tremendous amount of optionality as we move forward.
Thanks, Rob. That was great. The Point Roost complex itself, as you can see, is a small postage stamp, quite well contained right on the coast. And in the top right-hand corner of this picture, you see the tailings ponds. The one on the right is full. The one in the middle upper has some capacity. However, we have managed to permit the in-pit, the Pine Cove original pit as a tailings facility. And at 1,300 tons a day, which is our mill, that has capacity for 15 years. Just to put that in perspective, to build something to hold 15 years of capacity of tailings that's permitted with hard walls and no dams, first of all, if you can do it, it would take quite a while. And secondly, it's worth tens, if not hundreds of millions of dollars in this infrastructure. Another unique feature here is we have a deep water port, one of the deepest water port in northern Newfoundland for ocean-going vessels. Far into the future, there's opportunity here for custom milling as well, due to the capacity of tailings we can take. But more importantly, when we find something at Tilt Cove, we will be able to truck it here and process without any further tailings facilities required for any time in the near future. The mill is less than a kilometer, about a kilometer away from the port. Therefore, this is all nice and tight and fully permitted site with a 1,300 ton a day flotation mill. In and around that mill, the Pine Cove project and pit, are other deposits which we have mined in the past or are about to mine in the case of Argyle, as well as other opportunities in what's called the scrape trend, which is the trend of mineralization in and around within a 5-kilometer radius of the pit itself and the mill infrastructure. Argyle, as you've just seen, is an extremely robust project showing IRRs in the thousands of % at today's prices. However, we're also doing exploration on the scrape trend and have a relatively new discovery that was announced over the last few weeks called Zone 278, which is really the extension to Stoggertite. Stoggertite is a mine that we mined in the past, and we've been exploring the strike extents. And as you can see from these recent results, we've got some quite impressive numbers, 18 grams over 5 meters, 10 grams over 7, 5.5 grams over 20 meters. This is larger and higher grade than we're used to over the last 10 years. And it's basically drilling a low order IP anomaly, induced polarization anomaly, chargeability anomaly, which would be low on our list in normal situations. And we have several others of them that we haven't tested yet. So looking at this and the opportunity that we're doing, we're back in drilling another 1,500 meters to test the strike extent of this based on the size of the IP anomaly. And it's quite exciting. We've drilled some holes. We are continuing with another 1,500 meters. So expect some results over the next several weeks from Stoggertite extension as well as testing other IP anomalies that are similar in style to this one. So for the near-term future of Pine Cove, things are looking good. Argyle is a robust project, and Stoggertite is looking like it'll be something even so far looking to date that the intersections are wider and higher grade. So we're quite pleased with the work that we're doing in and around the Pine Cove project and see that continuing for quite some time. For the future beyond Argyle and Stoggertite and anything else we find in scrape trend is the Tilt Cove Gold project, which is about 40 kilometers to 50 kilometers, depending where you are on this belt, east of the current producing assets. Easily truckable to Pine Cove Mill from here. The cost to truck anything from here is well less than half a gram. And therefore, anything that is 2 grams or higher here that becomes even a small resource could be converted to a reserve and mined because we don't have to find something large enough to justify its own infrastructure. We don't have to find something large enough to justify permitting of tailings, etc. Anything we find can be permitted as a mine and then shipped to our current assets 40 kilometers west of this. What we've managed to do is pick up a 20-kilometer strike length to the northeast and to the southwest of the past producing Nugget Pond mine, which produced at 9.85 grams per ton diluted grade. The Nugget Pond mine is situated within a banded iron formation, so very, very strong geophysical signature. And this is picked up on the geophysics stretching right from the Betts Cove mine in the southwest, straight through Nugget Pond mine up to the Tilt Cove mine in the northeast. Both Tilt Cove and Betts Cove were large copper producers in the late 1800s. Tilt Cove being a very large one, supplying a lot of copper out of Newfoundland. And you can trace this red Nugget Pond horizon, which is the banded iron formation, right through this 20-kilometer stretch. What's very interesting here is the three ponds in the middle of this package, being the West Pond, East Pond, and Red Cliff Pond, were protected watersheds for the Snooks Arm community. The government of Newfoundland, as they do in some cases, combined Snooks Arm with other communities to cut down on government costs such as power distribution, snow plowing, all that kind of stuff. Snooks Arm is no longer incorporated. Of the 27 houses in that community, only 2 remain, and it's no longer incorporated. And the water protection for West Pond, East Pond, and Red Cliff Pond has been lifted. No one has drilled in this 7-kilometer strike right next to a high-grade mine in the last 20 years due to that protection, and we'll be first to drill those targets. We believe, as with Nugget Pond, the reason it's called Nugget Pond, that the ponds are here due to cross-cutting structures that intersect the Nugget Pond horizon and create depressions. These cross-cutting structures in some cases bring mineralized fluids, and when they hit the banded iron formation, they convert magnetite to an iron oxide and precipitate out to gold. So we're looking for low magnetics on cross-cutting structures similar to the Nugget Pond mine, and there are many of them throughout this exploration program, exploration licenses. So we'll be drilling. We're back in there. We had to stop due to COVID since the winter, and we are back in there this month, planning to do an aggressive drill program on the many targets that are within here. Looking at this particular slide, the bottom right picture is the banded iron formation, and you can see from that why it would stand out within the geophysics. The top right picture is the normal ore that you get out of the Nugget Pond deposit. And in the very high-grade quartz within that, these are the museum-type specimens you see within the Nugget Pond mine. Several of our employees worked at the Nugget Pond mine, including the general manager, ex-general manager who's with us. We understand this deposit very well, and we understand the geological and exploration model, and that's what we're applying in our programs for Tilt Cove project. If we zoom in a little closer to where the Nugget Pond mine was and look at the geochemical signatures, which are the hashed red areas on this map, there's a large geochemical anomaly to the southwest of the Nugget Pond mine, and that is a till anomaly based on ice direction glaciers that that went through many years ago and left a till anomaly to the southeast. The anomaly to the northwest of the Nugget Pond mine is, for lack of a better term, bleeding up the cross-cutting structure. So we're looking for similar geochemical anomalies along this red Nugget Pond horizon. And as you can see, to the southeast of the ponds and the northwest of the ponds, you have similar, very compelling geochemical anomalies as well, many of them. We know that the cross-cutting structures are under the ponds as we've flown LiDAR, which picks up structure. So we have geochemistry, geophysics, structure. And then back in the late 90s, a company tried to drill from the north shore of East Pond and intersect the Nugget Pond horizon. However, the drill hole was angled in the same direction as the dip of the deposit of the Nugget Pond horizon, which dips to the southeast, and therefore the hole stayed in the footwall. It did, however, hit some stringer zones, of which they received results which are very narrow, however, showing 5 to 10 gram per ton grades, which is what the grade of the past producing mine was. So we've got indication of grade on strike from this past producer. We've got geophysics, geochemistry, structure, and all of this is within 40 kilometers of the only producing gold mill on the island, which we happen to own. So we're quite excited about exploring this particular area. So look for information on that over the next few months. There are other targets up near Tilt Cove, the Tilt Cove mine, where we've had grab samples up to 350 grams per ton, down to the southwest at the other previous copper mine. There are grab samples there up to 7 or 8 grams per ton, as well as drill intercepts from drilling around the old copper mine. There's even a gold halo around the copper mine where we're receiving results of anywhere from 2 to 7 grams per ton over 1 to 13 meters. There's definitely a zone there as well. So there are many, many targets, as you can see on the inset map in the red stars, many targets for us to test within this Tilt Cove project. So we've initiated the program. We plan on doing an aggressive drilling program. It has been delayed due to COVID, but we're back in there now, setting up to drill again. So again, look for information on that, as well as Stoggertite and Argyle. However, what we're really looking forward to is moving forward on our Goldboro gold project in Nova Scotia. That's our development project. This is a stable jurisdiction. There are many known deposits here with a lot of ounces, most notable being St. Barbara's through their acquisition of Atlantic Gold, a series of west to east trending deposits, of which we are on the eastern end near the shore with the Goldboro mine. We've drilled this deposit to the point that there's about 1.4 million ounces in this current iteration, which is getting quite dated. We'll have a new resource by the end of the year that'll feed into the definitive feasibility. However, it currently is the largest single gold deposit in the province. St. Barbara and through Atlantic Gold has more ounces in total, but this is the single largest gold deposit in the province. It's analogous, I have trouble with that word every time, to the Victoria Goldfields of Australia, which host the Fosterville deposit. It's similar age and host rock. These extend very, very deep to several kilometers. We've drilled it to 550 meters deep, and we're still hitting the zone. So there's a lot of opportunity to expand this resource as well. When we purchased the project a few years back, there was 850,000 ounces in about 28 stacked zones. We're now at 57 stacked zones, 2.1 kilometers of strike. We've confirmed mineralization down to as deep as 500 meters, 550 meters, and this is open in all directions, along strike, down dip, down plunge. So we continue to drill. We've just finished a 5,500 meter infill drill program on East Goldbrook in order to convert inferred to indicated resources to use within our definitive feasibility study. We're just starting to trickle in some results for that. So also in the news flow, which is significant from now to the end of the year, look for results from infill drilling on East Goldbrook over the next couple of months as well. Every time we do a new drill program on this particular project, not only do the ounces go up and tons, but also the grade. And that's a factor of the nugget effect, which is quite pronounced at this particular project. The bigger the sample we get, in other words, the more drill holes we put in a certain area, the higher the grade goes. That's based on our conservative parameters that we use to do our resource. So we're quite comfortable with this resource moving forward, which is, again, close to 1.4 million ounces. Our exploration team sees this easily going through 2 million ounces, and we keep drilling to get there as we do our feasibility study. So we've accomplished quite a bit. We still have a bit of work to do. We're going back in. We've done the 5,500 meter infill program that we just finished. We are going back in to do some more infill drilling in other areas, probably another 1,500 meters. We will have a new resource and reserve by the end of the year that will feed into the definitive feasibility study, which will be completed by the end of the year as well. And we continue with our permitting process, which is quite a large program. We've been working on it for 1.5 years, and we believe we have approximately another 1.5 years to go through all the steps. So we feel that by the end of next year, we should have our permits in place to start the detailed engineering and site construction and pit pre-production. And then the year after that, we'll commission the plant and get into commercial production after anywhere from 15 to 18 month build. So quite a bit to do, but a vast amount of work done, and the project is looking very, very good. This is old. We're trying to get this updated. This is from about 1 year ago. So the numbers are not realistic, but the relative bar sizes are, and we're very undervalued, even since we've risen in price. So really what we'd like you to take away from this is that we continue to have positive performance, specifically at today's price of gold. Our guidance of 18 to 19,000 ounces is intact at a cash cost of $850 to $950 per ounce. We generate significant cash flows from the operation, and we have a large and robust balance sheet now. There's numerous development milestones on course. We think that we will be working towards growing to 70 to 80,000 ounces a year by building Goldboro. Discovery at Tilt Cove and M&A activity will be on top of that over time to bring this up to 150,000 ounce a year producer, whereby larger companies and a larger set of eyes will be on the story. But that will happen as we move towards that as well. So look for revised resources, a feasibility study, the Point Roost complex continuing to generate free cash flow, exploration at Tilt Cove, conversion drilling at Goldboro. So we believe there's a strong valuation upside, that this is still a good entry point, and we offer growth in exploration, resources, production, development, and cash flow, all in very low risk jurisdictions with excellent infrastructure and a very experienced local workforce who goes home every night and likes to do so. So no camps involved currently, and everybody, we have very low turnaround, and therefore have a great team that's developed over time.
Thanks, Kevin. That was really thorough. This is the same question I was going to ask. You're talking about being a 100,000 ounce producer. Is M&A part of your strategy to reach that objective, or are you hoping to get that production out on exploration only?
So it's a four-pronged approach that we've developed. One is to continue operating at Point Roost. 2 is internal discovery at Tilt Cove. 3 is development of Goldboro, and 4 is M&A. So in order to get to 150,000 ounces a year within 3 to 5 years is a very, very large ask without M&A. So M&A is something that we have an active program on, looking for opportunity. And as we find, as we grow in value, those opportunities increase. And it would be, latter in the strategy to tack on that to get through to the 150,000 ounces plus. But internally, we can easily see with the current projects that we have, moving up towards the 70 to 90,000 ounces with the building of Goldboro. And a discovery at Tilt Cove could bring that up to 150. However, from discovery, drill off, permitting, et cetera, that wouldn't happen in 3 to 5 years. So, we'd infill that with an M&A transaction. But we're not looking for a transaction to get to that rate. We're looking for a transaction that's accretive. So it'll either happen or it won't.
Okay.
But the opportunities grow as we do.
Sorry, what was the last part?
The opportunities grow as our market value grows.
Sure. Okay. And then in terms of acquisitions, are you looking only in the Maritimes? Are you looking across Canada, internationally? What's your strategy in terms of jurisdiction?
Unfortunately, good geology and good projects don't adhere to political boundaries. So we are looking globally. Obviously, the top shelf would be something in Newfoundland or Nova Scotia, but we'll throw ever larger circles around that looking for the right opportunity. So we're not adverse to going somewhere else, but we will not go somewhere that isn't a good jurisdiction or a place that we feel we can't work or is unsafe.
Okay, and will you be looking predominantly in precious metals, or are you agnostic in terms of?
Only gold.
Only gold, okay. And then in terms of stage of development, producing assets, development assets, exploration?
Yes. So
thanks for clarifying.
No, ideal would be a producing asset. However, we see opportunity in advanced projects whereby the proper team is required, or an influx of proper management and team and money to make it work, or a change in direction of the project. So anything that's really advanced near-term production.
And can you comment on Newfoundland and Nova Scotia as jurisdictions compared to other Canadian provinces?
Yeah, I think that, obviously there's benefits of operating in Quebec beyond other provinces. But as far as Canada goes, I would say that Eastern Canada would be, either a tie or a close second to Quebec for the incentives and the ease. Newfoundland, we find, is easier than Nova Scotia in the permitting and environmental. However, we've been in Newfoundland 10 years and in Nova Scotia too, and that might be the reason. But things get done. You understand what you need to do. It takes a little longer in Nova Scotia than Newfoundland, but you know what you're up against, and you go through the process correctly, and it's done. So it's a great area to work. Rob can comment on taxes and the opportunity from a financial point of view, which I think is as good as any other province. Rob, do you have any comments on that?
Yeah, I think on a relative basis, there's certainly when you talk about taxes, it's no worse than the other provinces. Newfoundland has a very established, sophisticated mining code and mining department that's been operating for years, and Nova Scotia as well. Has come up to speed pretty quickly. You go 5 years ago, you didn't even really hear about mining in Nova Scotia, but Atlantic Gold changed that, and we're able to kind of ride their coattails. And if the governments and the people that we work with to move those along have been helpful. They want to see development. It's got to be done properly, as Kevin said. You got to follow the process, but if you do, you tend to get your projects on track.
I think the most important thing about that is that they're both mine friendly.
Yeah.
Sorry, I was on mute. What other public companies operate in the Maritimes? I think it's an area that not a lot of investors have invested in the past, so maybe you could outline some of the success stories there.
Yeah, there are several. Atlantic Gold is the largest success story to date, being taken over by St. Barbara for close to $700 million Canadian on their projects in Nova Scotia. There is Maritime Resources in Newfoundland working on the Hammerdown deposit. There are several other exploration companies. There's
Marathon Gold
that is working on the Valentine project that has, I think they're up to about 4 million ounces now. So there's a lot of new eyes on Eastern Canada. And there aren't huge deposits in the past found in Eastern Canada. And I remember when I first went to West Africa back in the early 90s, I was told only look in Ghana because that's where all the big projects are. And my comment to that was, well, that's only because people have only looked there and they need to look elsewhere. And sure enough, the rest of West Africa picked up. It's, Atlantic Canada, although it's robust, well endowed geologically, nobody's really spent a lot of money there until Atlantic discovered their project. And I see a lot of new faces coming in and a lot of new money coming in. And there's no reason there shouldn't be lots of large deposits. It's not the geology is very typical to the gold deposits in other areas, such as in West Africa, such as in Australia, same age, similar rock type. So they're there. It just needs the amount of money spent, and I think it's happening now with the help of Atlantic Gold's discovery. And then following close behind was Marathon, who have discovered quite a bit of gold.
Yeah, and I think we'd be remiss not to mention Magnetera Resources, probably the newest player in Atlantic Canada. Just close to $5 million financing to explore in Newfoundland and New Brunswick. And I mentioned that because we were part of that. We vended in those properties. They were early stage properties, which didn't really fit in Anaconda, but we liked the properties and wanted to see our shareholders get value from that. Vended them into Magnetera with a minimum raise of $1.5 million. They raised $5 million. So we're pretty excited to see what they could do with that as well.
And can you give us an update about Goldboro's permitting process and the relationship with the local landowners?
Yeah, so we're in a very good position now with the landowners because Goldboro is called Goldboro for a reason. It's a past producer from 100 years ago. It's an industrial area with a PNG plant going up in the area. There's no rivers, salmon rivers, or there's really nothing there but industrial area. So we had an open house for where people could express their concerns going forward as part of the process of permitting. And the only thing we received at that open house, where we were open all day, people were dropping in and out, we had many visitors. The only thing we received were resumes. So we're very good with the landowners. We're very good with the community. We're very good with the local government. We're really good with the local MIGMA and are working on the shared services with them. Or not shared services, sorry, the
Mutual benefits agreement.
Mutual benefits agreement with them. We're very far down the road, further ahead than Atlantic Gold, which is already producing. So we're very good that way. So I think that this project, it's just a matter of time to do the right things with the permitting. We've as I said, done a couple of open houses. We've gone through being a provincial process instead of federal, and we're now going through Schedule 2, which is a process that takes about a year, and it's to identify areas for the infrastructure and how we're going to address the waters frequented by fish. And that's what we're working on now, and that takes another 12 to 18 months.
Thank you. And then going back to talking about Magnetera, is the plan to hold on to Magnetara shares, or are you going to distribute those to Anaconda shareholders?
Go ahead, Rob.
At this point, our intent is to hold on to those. It's in effect a bit of a pipeline for us, depending on how successful they are. Like I mentioned, we really like these projects. Our geos really think there's a tremendous amount of potential. They were very early stage, so again, in an Anaconda context, that's not where we should have been putting capital. So this is a tremendous outcome where we're going to retain almost 30% of Magnetera going forward, at least as of today. And they're very well funded to go really drill out these deposits.
As a Magnetera shareholder myself, I'm pretty excited about the possibilities there too. And I had a question about Newfound Gold. Can you provide some insights to their discovery? Any positive impact on Anaconda?
I think it's, the positive impacts for us are anybody doing work in Atlantic Canada that generates reasonable or exciting results helps us. As gold miners, there's no competition in the sale of gold. It's sold on the open market. So anything that's positive news helps us. We haven't dived into the project and looked at it as far as detailed due diligence or technical to see what they have. We have been following their news. Rob, anything to add?
No, I don't think so.
Okay, thanks. And do you have any labor issues, like availability, unions, etc.?
Rob?
Sorry, I just cut on my end a bit. Could you repeat the question?
Oh, sure. I was just asking about whether you had any labor issues with unions or things like that.
No, we don't have a unionized workforce out in Newfoundland. That being said, we have a liaison committee that meets, that works actively. And, Kevin alluded to before, we have an excellent VP of HR, Amanda Ballet, came over from Hud Bay and has really kind of spearheaded that. So I would, I think we have a very good relationship, very open and transparent with our workforce. as Kevin mentioned, no camp, they go home at night. Most of them are proud East Coasters. They want to, they want to be home and they want to work there. So there's really a great mutual relationship. If we can, the more we can extend the life of mine, the more they can continue working. So I'd say overall, it's an excellent situation from a workforce perspective, and very skilled labor. I think some people think, how can you get skilled labor? The reality is there's many Newfoundlanders, Nova Scotians all over Canada right now doing very skilled labor in a lot of different areas, whether it's Northern Ontario, Fort McMurray, Central BC. So when there's an opportunity to get people back to move home, they're ready to jump on it. Right, Goldboro, for example, we get calls from headhunters all the time because they're getting significant amount of inbound calls from very skilled and professional labor all across the country because they've heard that there's the potential that Goldboro is going to get built. So I think we'll do very well in terms of being able to attract very good labor.
And availability of labor, no issues there?
Yeah, we've seen no issues. And as Kevin mentioned, we have very low turnover. The people who work in the area and work with our company want to work there. And when we've had to fill roles, again, we haven't had any issues being able to fill them with very good candidates.
And I will point out what you said about not having a camp in this environment is a massive benefit, right?
Absolutely.
And also being in the bubble with no cases.
Yeah, we're on a peninsula that's kind of its own bubble within Newfoundland, which is a bubble, the island. So it's quite protected. We've never had any cases of COVID, and we've done better through the COVID environment because our overheads are down quite considerably. We use contract mining, so there isn't much of a sustaining CapEx number for us, and we've done quite well through this COVID environment, and that just speaks to the team that we have out there.
Great. And then just switching kind of, I guess, towards your strategy going forward. I mean, you've been a little bit quiet while you've been transitioning everything and turning around the company. What's your strategy now about getting the word out in what's an incredibly hot gold market?
Well, we're working with Adelaide Capital, so that should do it. But
do you have a better strategy? Someone feels tired and played out, Kevin.
We have a very aggressive, momentum-driven marketing strategy that we're acting on. It's generated definitely significant liquidity in our stock. We're combining a number of things that are momentum-driven along with the press releases that we'll be putting out over the next 6 months. So yes, we have been quiet when we've been making a lot of changes internally and externally. I mean, we've really rotated the entire management group out to the people that should be in place. We've replaced the COO. We haven't replaced. We've dismissed the COO and the project manager at Goldboro. We've changed consultants to a more applicable consultant for underground mining at Goldboro. So we've made all these changes, and we were not quiet during that. There was just it was like going to the dentist. It hurt a lot while we were getting it done, but it feels a lot better now, and our smiles are much brighter. So as we move forward, we've made the changes. We've got the focus. There was lack of focus, I thought, before. We were doing a number of things, so we've managed to spin out the technology company, spin out the grassroots exploration projects. Although we liked them, we didn't want to be spending on them. Now we'll have somebody else spending on them as we benefit. So we're focused. We've got a strategy that everybody understands and is clear on, and we're acting on it, and it's paying off. So it's a program that involves multifaceted promotion. These webinars, video shows instead of physical because you can't now, but signing up to a lot of those. Some newsletter writers, a focus on social media that we didn't have before moving forward. So we're attacking it as we get results. And the key to any promotion in my mind is going back the next time and saying you did what you said you were going to do, as opposed to being delayed and off, which we've had unfortunately had a history of in the past. But again, as Rob said, we're not going to dwell on that. We've fixed it, and we're moving forward, and things are going quite well.
Is there a plan to hedge future gold sales?
I'm looking at you, Rob.
But of course, there's nothing active at this point. We do sometimes look out as we will price sales out a couple weeks or maybe out to a month, just to take off some price risk in the short term. But for the most part, we've allowed ourselves to be exposed to the rising gold price. As we move forward with the development of Argyle, we may look at, look, we're looking at gold Canadian dollar terms of $2,700. Could it run more? Of course it could. But I think everyone saw, the leverage, what that can do, that $2,700 gold price on Argyle. There may be a portion of that we decide to lock in over a certain period of time. It wouldn't be over 2 years. I mean, there's always risks when you hedge, and we want to make sure, we don't catch ourselves off guard. But it would be with a very clear purpose. It's not just not just to hedge for the sake of it. We could see a potential to lock in really good gold prices, and what that does is it locks in the cash flow, which gives us the opportunity to go drill Stalker type, because that's looking excellent. And that's a hard dollar, and that's not flow through eligible. We need hard dollars. But it also allows us to really fire on other things like Goldboro, further development work we want to do there. So in short, nothing active, but I think if there's an opportunity to do it at an appropriate amount, we would consider.
Okay. And that's it for audience questions. So thanks for taking the time. Just to recap, from my perspective, I think it's a really interesting time for the company. You're well cashed up. You've got multiple growth avenues. Stock's at a 52-week high today. I think it's a really interesting time to be looking at Anaconda. Kevin, maybe you can give us the investment highlights just to wrap it up.
Yeah, so a lot of news, momentum-driven marketing behind that news going forward. By the end of the year, we'll have released a lot of results from Goldboro infill drilling, a lot of results from drilling at Tilt Cove exploration program. We'll have started mining at Argyle. We will be free cash flowing at these levels. It's just crazy the amount of money we're making, delta that we're making at $2,700 gold. More than 100%. So, I see us moving towards the target prices that the couple of analysts that have been writing us up have given, being valued at what we should be valued at as a producer, making money and generating profits.
Great. Well, thanks again for taking the time. It's exciting to be working with you again, Kevin. And I look forward to doing this more frequently.
Thank you, everybody.
Thank you.